Can you see? Oh, it's always so tough. So there's a little delay here. Okay. Okay, so hello and welcome to the live stream here of Most Productive. So today what I want to talk to you about is, are you ready? Are you ready to become an investor, to invest in the stock market? So you're already probably an investor in some way or other. You've invested in yourself by spending time looking for things to help you out. You're investing in yourself, but are you ready to actually invest in the stock market? Well, that's a question on many levels. And let's start at the very basic level. If you want to invest to learn what it's about, to learn what you should be doing, maybe just to have some skin in the game, to have an understanding of what it's all about. Okay, so to get that level, to be at that level, to do that, it doesn't require a lot, maybe a few $100s of what we call, I would guess, discretionary income. Money that you don't necessarily need at any particular point now or into the future. Money that maybe you would have spent on something that was going to disappear. So, one, it doesn't necessarily, the success of your investment isn't going to change necessarily the projection of your life, what's going to happen to your life now and into the future. But the value of what you learn may be, outweighs the loss of the money that you have. One. Two, it always helps to have a little bit of skin in the game to make us want to do better. So there's been various studies that show that when you are paying for something, you will pay more attention. So there you go. That you might see this as sort of the fee to learning. So yeah, there's a lot of good reasons to want to learn, and maybe this is a motivation to want to learn. So the stock market is trillions and trillions of dollars. It represents the potential to make your life better if you use it properly. If you don't use it properly, it can certainly make your life worse, because you will have less money and you have less time because you spent it on something that you didn't know how to use. So yes, you need to be aware of these things as you're using the stock market. And this might be an easy way for you to learn. So that's kind of the base and the lowest level at which of education that you need to have before you start investing in the stock market, is if you just want to learn. You just want to learn what it's about. And when I'm not solely saying the stock market, obviously there's lots of other instruments, but stocks is the sexier thing, I guess, when people consider investing. One of the sexier investments. Of course, there's a lot of exotic investments out there now that are much harder to understand. But certainly stocks are something that you can get there. You can get there for sure. So that's the base level. Now the next level is if you actually want to use it as an investing tool. You actually want to become an investor for your own personal gain. You want to use financial instruments properly. Well, that's going to require at least a little bit more knowledge, right? You can't just jump in and say you have a certain amount of money that you want to start investing. Well, you need to understand, well, one, is it the best choice for you? Because believe it or not, even though stocks represent a good chance to make money in the future, that future is certainly undetermined. So there's going to be some variability, and some of that might swing into the negative at times. So you need to be aware of these things, and you need to plan for these things, and you need to know what your situation is. So everybody's in a slightly different situation. Some of us may have debts. Some of us may have obligations that are coming up in the near future. And so you need to know when you're going to need money in the future. That's one of the basic things. And two, do you have debts now that maybe it makes sense to pay off? That's not always the case. These are almost never super simple questions, right? We have a general idea that we're going to need money this time, this time, this time, but the exact amount may be unknown. The exact amount we need is probably unknown, but what we want, of course, is as much possible. So we make decisions that hopefully meets the needs, but also maximizes the potential to make as much as possible. So think about that. Think about these things. Now that's still very basic and not even complete. You also need to understand all the different tools, financial tools that are available. You have CDs, you have bonds, you have REITs, you have stocks, dividend paying stocks, ETFs, mutual funds. There are a lot of things out there. Now you may already be invested and you don't understand what you're invested in. So, okay, that's fine. Take a look at what you have. And I discussed these things, different things on this, we'll call it a podcast, a vlog or whatever. We're doing that daily as a portion of the Most Productive podcast. So to be productive, it helps to have these tools in your tool belt. When's the right time to pay off a mortgage or not? There's a lot of things that are going on. That's not a simple question. If you have a 2% mortgage and the current mortgage rate is 7%, the current 30-year fixed is 7%, or whatever is 7%, if it's a great deal higher, and that probably means that the treasury, the equivalent treasury, is high as well. So right now, the 10-year benchmark treasury bond is around 4%. So if you're borrowing money at 2% or 3%, or even 4%, then it may not be such a bad idea to keep that money on loan and to use it to invest. Now, there's other reasons that you may not want to do that. This is how leveraged you are, and how much time do you spend doing these things. There's a price, there's a number. There's a number for wanting to pay off your mortgage, right? If you have, let's just say a $100,000 mortgage for a simple math, right? And say you have $100,000 in cash, you could pay it off. If you're paying 3%, well, if you are, let's say you wanted a guaranteed return. Well, you can take that 100,000, put it into the stock market, or you could buy a U.S. Treasury, and you get your 1%. You can get your 1% guaranteed net rate of return. Now, of course, there's taxes involved and things like that. Taxes on both sides, so you have to work it out. But you're talking about giving up, in simple terms, $1,000 a year. Right, $1,000. It's nothing to sneeze at. You're just giving that away by paying off your mortgage. So you think about these things. Is that important to you? What do you want to do if you want to maximize your productivity? How much money you're making? What you can do in life? That's a question you have to ask yourself. So yes, both of those things are guaranteed. You're guaranteed that you owe this money, and it is guaranteed the U.S. government will pay you back. Now, the value of that money is different, right? The value of $1 today is not the same as it will be in 10 years. But if you can match the length of the loan with the length of the U.S. Treasury, well then yes. And of course, now you have to ask yourself, are you willing to take a little bit of risk on top of it? If you're willing to take a little bit of risk on top of it, well then the spread becomes 2% or 3%. And now you're talking $2,000 or $1,000, $3,000. Maybe your loan isn't $100,000, maybe it's $500,000. And so now you have that $500,000 loan. Well, multiply what we talked about by 5. Now you're talking 15,000. So yeah, these are things you have to consider. Now it may be a very easy thing. It might be a very easy thing, like a credit card with 21% return. Yes, pay off the credit cards first. Pay off those things with the huge interest rates. Guarantee yourself that return. I mean, even if you wanted to learn, I would not suggest, not paying off those things first in this learning to be smart with your money first before learning to be smart about investing and stock investing. If you have this credit card debt that's high, 5, 6, 7, 8, 9, 10% even, it would probably be a smart thing to pay that off first. And yes, making sure you have money to get you through the emergencies of life, the ups and downs of life, set aside. I don't know how important that is. If you have essentially a blank or empty, if you're paying off your credit cards every month, if you do have investments, you can open a margin account on those investments, and you don't actually pay into those investments. But those are options that you have when emergencies occur. So an emergency fund, I don't know, how important that is to you. Now, I've always carried a relatively high cash balance for investment opportunities, but that also has a cost to it. If you just have money sitting there, and right now, almost most banks seem to pay a interest rate of basically zero. I think I have $60,000 in one of my accounts, and I got paid $30 last month. I believe $30, $24, something like $34, something like that, for $60,000 in an account. So, but I am keeping that money for investment opportunities, and I don't feel like borrowing against it. But that being said, it has cost me quite a bit of money doing that. In the last year, it's probably cost me $6,000 doing that. So it certainly could be considered a mistake, because I even though I was expecting to invest, I didn't. Now I could have rolled it into some CDs and things like that, and just made sure the investment, when it was time to invest, I could pull money out of margin, and then when the CDs expired, turn them into use them to pay off the margin debt. So there are options out there, there are choices out there. So thinking about them and making sure that you are gaining, making sure you are making at least a relatively smart choice is important. So what else? So now that you know the position you need to be in. So when you're investing, especially in something like stocks, are considered long-term investments. When you're investing for the long term, the money you're setting aside is money that, especially when you're younger, is money that it's almost like forgotten money. That's almost the best way to look at it. Like money I'm going to put aside, and it may be in sums that are inconsequential, and they should be inconsequential initially, like this money isn't going to make my life better today. And that's kind of a question you have to ask yourself when you're investing. What's the best use for my money? Is it going to make my life better if I spend it today or in the future? Well, hopefully, there's a point in there somewhere between what you have and zero, and somewhere in there is the magic number that you can invest in stocks and other things that make sense. And at first maybe that number is closer to zero, but over time, maybe as you grow and you see the value in investing, you see that, okay, I can make this much more money. I can make that much more money for the future. Maybe, I hate the word retirement, and I don't ever want to say that should be anybody's goals. I'm not about retirement. I'm about doing. I'm about creating. not about retiring, and not about sitting at home, wasting time or going on endless vacations. That's not the life for me. My life is about productivity, creating, making things. Now, some of those things can be extremely fun, but they can also be extremely meaningful and helpful to the world. So think about these things. What's that magic number for you? And it should be a relatively low number if you're not comfortable with what's out there. So what's next? Understanding what's out there, all the different vehicles. Now, yes, there's an endless number of investment vehicles out there, investment instruments, financial instruments. So you don't need to know them all. Stick with, the basics, at least, especially to start. Stick with basics, stocks. There are certainly complex stocks, simple stocks, mutual funds, ETF. If you're already invested, that's a great place to start. If you have a 401k at work and you have different investment vehicles, look at those. Does it make sense? We can talk about some of those things and what's available out there, and we will. If you don't understand them, then those are ones you're going to want to watch about. Even if you think you do, you may want to watch just to make sure your understanding is at least close to what someone who's been investing for a while thinks about these things. So, you have basically also, you need a psychological mindset when investing, especially for the long term. Now, what's the long term to you? The long term for me is infinity, essentially, right? I don't actually ever plan to use this money directly once I've invested it. Now, the residuals from it, the money that I make from it, that's a different story. Hopefully I can use that to do more in life, right? The $100,000 that you invest in total in your in your 30s, let's say by the time you're 40, you have $100,000 invested. Maybe by the time you're 52, 55, that 100,000 might be 400,000, might be 5 or 600,000. Hell, it might be $1 million by the time you're, by the time you turn 65. And so, maybe making sure that, you're making good choices so those things happen. And then you can use that money in a smart way, knowing what to expect. So, I really don't believe you should plan on spending any of this money until you get to the point, and it's going to take years. It's going to take years to feel comfortable with the cycles of the stock market and the U.S. economy, the economy in general. And of course, things happen in life. Life isn't so simple that you can plan it out. But know that, yes, you're going to need a level of understanding to get the most out of anything in life, especially something as competitive as financial investments. So, yes, we'll talk about things very briefly. Risk versus reward and the time value of money. Those are concepts that you need to understand. And they are not simple things. They sound simple, but they're not simple things when it comes to investing in financial instruments. But anyways, that's it for now. I'm going to have to go. I thank you for watching. Please just understand that, if you don't have that level of sophistication to understand what's going on in the stock market, start small if you just want to learn. If you just want to learn, now that's the price of your education. But even then, realize, if you have debts with high interest rates on them, it's probably a good idea to pay those off first before you even start investing in small amounts, even before you get started, because it just makes so much sense to pay off high interest loans first, because those are guaranteed. So, and if you're ready to jump in with 2 feet, or you're getting close to that point, we'll educate you. We'll make sure that you understand what you're getting yourself into, and psychologically be ready to, You know, be willing to put in the time necessary. And I'm not talking about studying the stock market, but the patience that's required to have positive results. It might take years and years and years. All right, thank you so much for watching.